Hi, welcome back. Well, as promised, we have Suveer, Chainani, the CEO, Institutional Clients Group, and Sunil Tirumalai, the Head of Research and Equity Strategist for Emkay Global, who join us now. They have an India conference that kicks off tomorrow and will go on till the 9th of August. So let's find out. They have some very interesting views on individual stocks. So Suveer, Sunil, good morning. Thanks for joining us. I want to start off with you. What's the mood like now? I mean, I know you'll get to know only tomorrow onwards, but at the moment, is this whole equity cult being challenged? I mean, is it under threat? Are people losing faith in equities as something that will give you good returns?
And thanks for having us. So at a near bottom of a cycle, it looks structural. So that's a commonly held belief that things are all over, but clearly it is not. The institutional money is waiting and we're getting inbounds. So dry powder is going up. As we know, the SIPs are very sticky and 8,000-9,000. And at the same time, the cash levels in funds are going up. So dry powder, as we put it, is building up, and people are waiting, because still valuations are, on an aggregate basis is not very attractive. But people are waiting. I think it will all come back sooner than later.
Okay. Well, Sunil, the problem has been with earnings growth.
Yeah.
And it looked like we've been pushing it quarter after quarter. This quarter, what has been the tally so far? More downgrades than upgrades?
There have been, yeah. So basically, if you look at the results that have come out till now, for the Nifty stocks, we are standing at around 5.5 to 6% earnings growth. The full year expectation on the Nifty for consensus is about 30%. And if you actually look at the bridge from FY19 to FY20, 3 stocks account for 2/3 of the growth. Right, that's Tata Motors, ICICI Bank, and SBI. And I think there will be downgrades. And if you look at the valuations for Nifty, it's still high, it's still one standard deviation above mean. That's how we would look at it. So the valuations don't account for or don't price in meaningful cuts going ahead. So that's why we have a kind of a bearish stance in our alpha portfolio. We have a big overweight on cash. We have about 4% cash in our portfolio.
Also, to take the bearish stance forward, you have an exit on high conviction overweights, and you just explain that to us. There's Axis Bank, Bajaj Finance, HCL Tech, M&M. So what do you do with these stocks? Like say a Bajaj Finance, for example. Are you cautious because of the commentary that the management outlined?
Let me explain that. It's not an exit out of what we plan to say, is that a high conviction list of 10 names changes, right, with time. So we are replacing,
replace these names.
Yeah, no, replace by, so they're still buys, but they're not the top 10 because of the movement or changes in fundamentals. So it's like, SBI Life has done very, very well. Now we're replacing that with iPro Life in our top 10. But as a rating and as a recommendation in the Nifty portfolio, it is still there and over.
Okay, so something like a Bajaj Finance still stays in your portfolio despite the fall that it has seen?
It's equal weighted with us.
Okay.
Yes.
Okay.
Yeah, it's equal. It's equal weighted in our portfolio.
Okay.
I think overall on the NBFC space, we are equal weight. It was overweight earlier. We feel we are a bit cautious over there. We'd rather play through the banks, and ICICI Bank and SBI are and Axis Bank are there in our top pick list.
Okay, well, you don't think the retail banks merit being there? They are too expensive for your
Yeah, there is valuation, yes, and for the corporate banks like ICICI Bank, I think the cycle seems to be nearing an end. ICICI Bank has fairly high level of provisions that they've already done, and given the risk reward on the price on the valuations, I think that's where the favor is.
Okay. What about something like an M&M? I asked this because these stocks are sitting at 52-week lows. The results have been under pressure, sales have been under pressure. But do you think the worst is over for some of these auto names in terms of a price correction? Or, are you cautious here?
So, autos is actually the biggest underweight in our portfolio. I think there are multiple issues. Actually, M&M happens to be one stock where our analyst is reasonably positive, but as a sector, we are kind of negative on the sector. Quite a few issues. Including for example, funding for intermediaries and the distributors, which is which is causing a problem. Rural cash flows, all flowing down from food inflation being low, etc. Yeah, I mean, I think in general the demand is weak. It's slowing, and that's what is showing up. I mean, that we don't see that changing very soon. There are a lot of other factors that need to fall in place.
Okay. Suveer, when you were putting together the conference, were there any themes that you all wanted to explore?
We thought of that, and it's in India. We do our sectoral conferences as well, and dealer days, etc. But this one is broad based. But vis-a-vis last year, what we've done is little bit. We were more of a mid-cap conference earlier. We made it little more large-cap oriented, and in terms of numbers, and we're the first to go out of the reporting season. In fact, it's not even over. We are having about 115 corporates, which is a jump from 95 last year, and our client roster is very strong. It's up some 25-30% from last year.
Okay. In terms of triggers, there's an RBI policy tomorrow. Now people are talking about perhaps the possibility for 50 basis points rate cut as well. If it comes through, 25 or 50, will it do anything to spur demand, or do you think a lot more needs to be done from the government?
Sunil has got an interesting thesis on that, but I'll cover my bit, and I've been talking a lot about the real rates being very high in India, and the inflation is so low, repo is so high, so 200 bips easy cut. But I'll pass on to Sunil to talk about his thesis on transmission, and he'll talk about that.
So I think RBI is doing all that it can under its powers. I mean, inflation and their projections are reasonably benign, and that's what they're I think 25 or 50 basis points. The question is, it has to transmit into the real economy. What has happened is that the bond market transmission has happened. The bank rate transmission has been very slow. And it's the bank lending rate that really matter in terms of for the economy. I mean, less than 10% of private sector liabilities come through the bond market, and only that's what has seen the benefit. For the rest, the banks need to be able to bring down their deposit rates, and I think their hands are tied as long as the small savings rates are high, remain sticky, and they're quite big nowadays. Over the last 18 months, if all the small savings schemes were one bank, that would have been the fourth largest bank in the country. So they're like quite big, and they are also more than half of those small savings are generated through the banking system itself. So you actually have competition for banking products from the government, and I mean, as long as those rates remain sticky, it will be difficult for the banks to bring down the deposit rates, and hence the transmission into the lending rates will be tough. So which is why I think it's wrong to keep asking the banks or blaming the banks to bring down the rates. The constraint is somewhere else.
Yeah, the constraint is with the competition, and the constraint also is that they have to provide a lot, so they would like the margins there. I don't know, somehow I still think that banks do cartelize, but that's another issue. We've got to stick with what stocks you would like. Looks like you are into getting positive on pharma. Going by your large cap overweight.
It's also quite selective over there. I mean, I think our overweights are on Cipla, division, IPCA, right? Not the entire sector. And I mean, there are specific capabilities and nuances with each company. And I mean, but I mean, it's an overweight based on. I mean, if you actually see, there are two stocks which are outside of the index. That's division, IPCA.
Okay.
But on the other large cap, I think Dr. Reddy's is a top sell for us.
Top sell.
Yes. I don't see too many FMCG names on your list. I'm asking because this has been a good. Of course, there is Marico, but this has been a really good quarter for a lot of the FMCG companies. Whether it's Nestle, Bata, Marico, Asian Paints, Berger, etc. Apart from Marico, any other stocks that you like?
So we've tried to keep the portfolio reasonably concentrated, right? Out of 50 stocks in the Nifty, only 25 are in our portfolio, plus 9 off-index stocks are in the portfolio. I mean, given the, so if you look at a broader basis and do a revenue-weighted slowdown or growth numbers, you actually see that these things are still slowing down. I mean, there may be smaller companies, but which are showing better numbers, but the larger ones are still, heavyweights are still dragging it down, and the valuations are not really so supportive. So yeah, I mean, I think that's why we have fewer names, and it's even consumer is an underweight portfolio for us.
Yeah.
Suveer, what are you looking at as a bottom for the market? Sunil just said that you are 4% into cash.
Yeah.
Your advice. So do you think that you will get much lower levels? Is 10,600 a reasonable bottom? Because some technical guys threw that number.
Just to put that 4% in context, that's a big. I know of funds who are more than 25% in cash, by the way. Regulated.
Yeah, 4
fund.
doesn't look
Right.
big. There was one guy who told us he is half in cash.
Oh my God! Fund, mutual fund. Yeah.
I think an individual portfolio
Right.
investor.
So some of the funds are massive. Just 4 is just to give a relative picture. We don't, because as a dummy portfolio, there's no redemption money. It's the proactive cash.
Yeah.
So it's the largest weight in our portfolio. But as Sunil said that the earnings cuts are happening broad based. Rather than suggesting a level of Nifty, the business, what needs to correct is the real estate, right? We've talked enough in the past as well, and the whole thing about subvention schemes which is now coming out, and real estate prices need to correct, and there needs to be a fire sale over there, and the clearing of inventory needs to happen. And when that happens, that will be somewhere around.
Is that a year away? Is that half a year away?
It all depends. Right now, the price corrections are not enough. Maybe 6 months. Maybe who knows? Who knows really?
Okay,
Yeah.
if there's one thing that you would want the government to do at this point to sort of get things fast-tracked in terms of demand, Sunil, what would it be?
Yeah, I mean, I think more than demand, I think clarity on various tax issues is something that definitely needs to come. That's something the markets, in most of our investor conversations also, that's clearly coming out. I mean, to the extent that the fiscal constraints allow, I mean, some consumption boost would be helpful, because I think it's basically demand which is completely falling apart, and it has. I mean, I think the government is doing a lot on the investment side. That has to be done. It takes a lot of time for that to trickle down and multiplier effects to come, but something on the consumption side should be helpful.
Unfortunately, at the moment, the government's bandwidth is occupied by more political issues. So let's wait and see. The finance minister has met a lot of people, whether something comes out of all that. Suveer and Sunil, thank you very much for dropping into our studio, and have a great conference. We'll touch base with you and check your learnings thereafter.
Sure. Thanks for
Well, we have to wrap up
you.
Bazaar on that note, but we are wrapping up Bazaar on a high. Markets 1.5% higher on the mid caps, and almost 3 stocks in the green for 1 in the red. Lots of ideas on Chartbusters in a minute.